Administration's really poking at rates every time they can on the internet, on the headlines and video coverage. They're always talking about rates. Trump's State of the Union talking about rates, right? So it was a big highlight on interest rates, and sure enough, I mean, they were moving up, and pretty much since the first day of March, they've drifted lower. Pretty much since the first close of March, they've been drifting lower. And I think like what's happened is you run into this situation, right? So administration has everyone all bulled up on bonds, this idea that like the bond market comes first, not the stock market, right? The idea that look, we have this maturity wall coming up. We need to refinance all this debt. We need lower rates. And granted, 50% of the deficit, right, of the excess money, basically 50% of the money the government has to borrow every year is to pay interest. So there's this idea that like if you can cut the borrowing costs, you can cut a part of the deficit without actually having to cut major other major sectors of spending, right? The problem is that we run into this position where bond yields fell on this administration's more restrictive tone, and we didn't quite get we aren't quite facing like a labor market acceleration yet.